Are you concerned about politicians affecting your portfolio and the markets in general? You're not alone. October has been the worst month in 10 years for most markets in general. And this year in particular, almost every single asset class has dropped. But I assure you, it's not the end of the world. It's not the first correction, and it will not be the last correction. Bear markets in general, which means a falling market, last on average about 17 months or 1.5 years, while the average bull market, meaning a rising market, will last on average approximately 6 years. Bear markets end as abruptly as they began. And if we miss that moment of recovery within the market, in other words, if we're not invested during the bear market and the market does abruptly go up and we miss that first leg up, then we tend to miss a lot of good performance. The hardest part is to predict a rapid recovery. And it's very difficult to time the market, but really the best course of action is to remain in the market. Time in the market makes all the difference when you compare it to timing the market. Timing the market is a fool's game. It's difficult to get it right. Not even the greatest investors in the world like Warren Buffett can get it right. If you look at history, every correction that we've gone through, whether it be World War II back in the 1940s, to the Korean War in the 1950s, all the way up to the technology bubble in 2001 and 9/11, including 2008 financial crisis, every time we had a correction, it was the best moment, the most opportune time to actually deploy money in the market. Markets will go down from time to time. As obvious as it sounds, investors hope that their portfolios will never go down, but that doesn't happen. It's not reality. When you're invested in different securities, whether it be stocks, bonds, gold, what may, you will have a certain volatility going on in the account. It is perfectly normal. But long term, the tendency of these assets tend to rise. While psychology, emotions, and sentiment play against us, and all the news that we're surrounded with is always so negative, because let's get one thing straight. Bad news sells. Good news does not sell. So all the news we hear most of the time is always bad news, because that's what makes money. At the end of the day, the most important thing that investors should be focused on is having a long-term plan and reviewing that plan frequently, at minimum once a year. If you like this video, I would ask you kindly to share it with your friends and family. If you want to get more information about me, please Google my name and you'll have access to my website. Thank you. Have a wonderful day.